Welcome to FinTech Talent's Digital Builder. I'm Bradley Leimer, co-founder of Unconventional Ventures and co-author of a new book about better banking business models called Beyond Good. I'm joined in this discussion about growth by Claire Riley, Chief Engagement Officer of PensionBee, Jens Hartwig, co-founder and Chief Product Officer of Laka, Josh Hart, co-founder and Chief Product and Technology Officer at ULife, and Robert Ba, founder and CEO of Keepable. So welcome, everybody. I want to start off with this. I want to get a quick elevator pitch of your company and what it does in a couple sentences. So let's provide some context about what you guys are building and about this conversation. I'm going to start with Claire. If you could tell us a little bit about your company.
Hi, everybody. I work for PensionBee. PensionBee is a leading online pension provider, and we help people combine all of their old pension pots from periods of previous employment together into one new plan managed by the world's biggest investment managers. Our mission is to make pensions simple so that everyone in the UK can look forward to a happy retirement.
And Jens.
Hi, everyone. I'm from Laka. At Laka, we have created collective cover for cyclists. Our members ensure their bikes and their health through the collective by sharing the cost of any claims at the end of the month. So it's building a fairer and mutual insurance model that really benefits the customer.
Josh, what about ULife?
Hey, yeah, so ULife, so we're a new type of insurance company. We inspire people to live healthier and do healthy things every day that ultimately de-risks them, so it's a win-win. We insure companies with group life insurance, income protection, and critical illness. We have a ultimate goal of helping people live their best lives, mentally, physically, and financially.
And Robert?
Thank you very much. Yes, Robert Bohr, founder and CEO of Keepable. So GDPR tends to be this big, scary beast for all industries, including financial services. And so we are a privacy framework focused on GDPR in an award-winning SaaS solution. And we save time, cost, and money, but also open up the opportunity to get all the benefits that compliance brings.
Awesome. And wrap up with Michael.
Yes, hello everyone. So tomorrow is a sustainable banking platform, and we offer sustainable bank accounts. What does that mean? So banks usually work with their customers' money, and often that means they invest that money into the coal industry, the weapon industry, or any other destructive companies. And with tomorrow, that's different. So we only invest our customers' deposits into sustainable projects and companies which help actually reach the Sustainable Development Goals provided by the United Nations. And we also issue sustainable debit cards. So every tomorrow customer, every time he or she pays with our card, we take the interchange fee and put that into a climate protection project, so that with every payment you create positive impact through the payment.
Awesome. Sounds like a great group here. So today we're talking about, that rocket ship, hockey stick, up and to the right type of growth that you see on Silicon Valley, the TV show. It's long been the goal of so many startups that often, this growth has come at the expense of profitability, of regulatory concerns, and employee culture, and so many other things. But a new generation of fintech startups is emerging, like these ones that have focused on sustainability and empowered workforces, as well as making money and profitability and all that fun stuff. Growing businesses, imagine that. With that, so let's just dive into the first question. How has growth above all metrics, even profitability, seemingly been the lesson of this Silicon Valley venture capital era? Could the idea of startup sustainability be the most disruptive trend of all? Let's start with Michael within that context.
Yes, so I do believe that this kind of thinking, which originated in Silicon Valley, has had really bad effects. And one of the really bad examples is Facebook, I believe, with Mark Zuckerberg creating the framing, move fast and break things. So growth above all. And that means that Facebook, has moved very fast and then always apologized later. which made some people call them the apology machine. And I believe that is part of the problem if you place growth above all. So I think in a lot of digital companies, growth is important. So if you build a platform, then you need to establish and grow a certain user base that with very slim margins of each user, in the end, help keep the platform alive. However, it's very important that you don't put growth above everything. So it's still important to respect all stakeholders. With that meaning in regards of the environment, the customers, the employees. So these things, these elements, these stakeholders shouldn't be sacrificed for growth from my point of view.
Robert, what do you think about that?
So I certainly think that growth above all else is an incorrect way to go. I have a lot of sympathy with the current VC model of a fund that invests over a certain period of time and then looks for a return crystallized over a certain period of time, that they are looking primarily at that growth to deliver that. I think there has been, I totally agree with what was just said about the fact that should not be at the expense of respect at work for all stakeholders, employees and customers alike. So, for example, we plant trees every month for customers, and we have a pro bono charity track for our customers as well. And it's the okay in the business while pursuing. So I think we're in a pivot point to see how these competing come, but there should always be that respect.
And then, Josh?
Yes. So, sorry, I don't know if I'm having internet difficulties. So, yes. Should it be prioritized? I think growth is a fabulous, it's a really good reference for, is there demand for the thing that you've created? And a lot of the venture world seems to be using it as a proxy for success. I think what we're learning more and more about the industry as a whole is that growth is one of the major factors, but not the only factor. One only has to look at the situation with Uber on employment law and the recent effect that that's had, or a number of companies that I probably won't mention around churn. And a lot of companies get an immense amount of growth right at the beginning, but then have a major issue with churn, and that's down to product quality. And at ULife, I mean, we've always considered product, obviously being chief product officer, I'm going to say this, but we've always considered building a product that's worthy of the customer is our number one priority. And what we found is when we found the right sales market fit, it's actually just been really easy. We've not really stressed about retention, and the good feedback we've had has made life a lot easier. So I think growth is the number one reference for a lot of venture capitalists, but it's not the only reference. And I think the market is, if anything, leading to telling us that it's probably not going to be the only primary reference for much longer.
Yeah, unfortunately, I think VCs sometimes they don't even invest when it's not looking like that hockey stick is eventuality. Let's go to Jens, and then we'll go to Claire.
Yeah, I mean, all of you guys have brought great points. It's as like Robert said earlier, the VC business model is I need that 3x within 1.5 to 2 years every time in every funding round. And of course, also just the decision of us founders to say, do we want to do that, right? Is this the venture path we were taking, or are we building a slower, more profitable company and like going on this journey? And it's like I fast can say we've chosen the venture path, and probably most of you have as well, right? And it's I guess like finding the right partners on that journey. I'm super happy with our investors that they say, this is like, you're not just building a growth engine, you're also building a company. You're actually employing people, and you have to take care of them equally well. It's fast. Ethics was always at the core of our business because we always believed we got to change insurance to treat customers more fairly. And I think that's obviously always a balance which you have as a founder. But I feel like maybe I'm proven wrong that the really successful companies get it right, but deep down I would hope so.
Go ahead, Claire.
Claire is just coming off mute. No, I think I mean, look, everyone's made some amazing and points I really agree with. I think to touch on the second part of the question, which was will sustainability be the most disruptive trend of all? And I think, I think it's now a social and economic imperative for sustainable businesses to come to the fore. And I think, countless studies have shown that companies that do well by all their stakeholders, as we've touched upon, tend to ultimately have better financial returns. And I don't think we're recognizing that yet. I think we've still got some way to go, as you've just referenced, with some of the kind of attention that's been on the unsustainable business models of some businesses in the UK, ones that are based on exploitation of workers or the environment. And I don't see how those businesses can prosper in the long term, and when in fact they're making so many of the pressing environmental and health and social challenges that we face as a world worse at the moment. So I think the imperative really is to kind of redirect capital to become a catalyst for social change, rather than fueling a lot of the social inequality that we're seeing at the moment. And so I think it's not just desirable, it's essential.
Well, when we think about the damage that can be done by this fetishization of growth, and the startup model in general, a lot of people get hurt, and a lot of businesses, I think, really lose their way in pursuit of this growth. So let's talk about that a little bit. What damage can be done in the pursuit of growth? Let's start with Josh on that one.
Thank you. So I'd say that the greatest risk that you have when only focusing on hitting those numbers is that you undermine the quality of the thing that you've created, because you start, in the B2B world, you're starting to compromise to, let's say, specific client demands. And in the D2C world, you're starting to go down that kind of black UX world where you're starting to just create mechanics to facilitate that extra tap. I think that, but greater than the damage that you can do to the product as a byproduct of kind of only focusing on growth, is you can lose out on that purpose that you set out with. I think every founder has a truth that they're ultimately seeking, a vision that they're trying to actualize and realize around the business they've created. At ULife, we always said we wanted to build a company that would help people live their best lives, and we've stuck true to that. But often when you're only focusing on growth, you risk undermining that, because you might be, in the case of ULife, there have been plenty of opportunities where we've been asked to insure something that we fundamentally felt wasn't a good insurance product, let alone, whilst we could have made money, but we just didn't think the product was very good from a financial perspective. And then we didn't take that revenue, which, is a good example where you've said no to cash, but yes to values. But I think when you just focus on the cash, you lose the values.
Absolutely. We talk about a lot of the founders and a lot of these founding teams in the book that have struck that chord. Michael, what do you think?
Yeah, I also believe it's always very difficult to prioritize. So in a startup, you have so many things that you'd like to do. Build a great product, grow faster, monetize, include more impact features. And so if you put growth as a single metric, I think you'll unbalance the whole value proposition. So with Tomorrow also being a sustainable company, we integrated sustainability into every element of our business model. And so that kind of helps us for our company as we grow. Our impact also grows with the company. However, we still make sure that we get the balance right. And in the end, it's when you think about prioritization, it's always important to bear in mind that there's other things, and there's the triple bottom line: people, planet, profit. And the growth doesn't play part in that triple bottom line, but I think it's very closely connected to profit in the long term. But you still have to take into account the other two elements. And only if you have a really balanced offering, I think you can also be successful in the long term.
Absolutely. And I think you could do well by doing good at scale. So Jens, let's talk about that, the damage of growth.
Yeah. I think it's one of the big points for me is always the team, the employees. I think like Josh points 100% of our product. I'm the CPO as well, so I support that 100%. But for me, the team, because really the processes, the structure comes usually last within the company, right? It's like this thing which you have to do so you can scale, meaning acquire more customers. But that's usually the thing that gets the least attention. So it's like, for me, like the damages around you, like setting up proper HR processes, developing your people, provide what, like, grow people with the company, not just hiring constantly senior talent. I think that's really damaging to the people that joined you really early on in the journey. And I think that's one of the impact. And of course, finding these like regulatory loopholes that's not looking outside the company is like Uber did with their hiring freelancers effectively. I think that is growth just damages probably economy as a whole, like society as a whole. Hiring people without health insurance plans, without building pensions, that has a much bigger impact. That's not answered like, okay, and by impacting someone in the next 1 or 2 years, but 30, 40, 50 years.
And speaking of pensions, what are your thoughts on that one, Claire? Damages?
Yeah, I have a little slightly different view. I guess I think we need to consider the damage to society and to corporate governance. It's the human cost. So, like, if a VC model is to invest in 10 companies in the expectation that 9 will fail, like, what about all the people working for those 9 companies who have kids and mortgages and aging parents and food to put on the table? Like, and in fact, a lot of those are not people who ever wanted a $10 billion valuation in 5 years, right? They were actually more focused on building sustainable, happy businesses with strong values, and they just were intent on earning everyone there a comfortable living. So I guess the damage is beyond destroying good businesses in the hope of a unicorn, but there's also a human cost to that model and damage to society. And then I guess on the corporate governance point, like what we see with some of these funding models is that when it does come to potential listing, like the founder will then try and take back control of the voting through like special rights or dual share classes. And for us, these dual share classes are at odds with the type of inclusive and responsible capitalism we want to start. We personally want to be playing a part in building and creating an investment system where corporate actors are accountable to shareholders. So one share, one vote is the foundation of strong corporate governance. And that's a principle we now see as under threat around the world, including discussions now in the UK about that. So those would be my 2 points.
And Robert, what's the worst that could happen?
I think there have been some good examples alluded to in terms of, I think when you put growth above all else, you take shortcuts and you start, for example, regulatory compliance is a typical one that fast growth or people pursuing fast growth above all else may be pushed to one side and they think they can just backfill later on and you just can't. And I think as well as the regulatory compliance is there for a reason to protect us all, but I think you can also end up with a very toxic culture in a company. And I think we can all think of some where they're pursuing growth at such a speed that there's very few people who are happy in a company. There's like a small web with control, as was alluded to, and the rest are pretty unhappy. But I do think that you can leave behind, if you focus on growth only, all the belts and braces that society have put in place to actually protect us all there as well.
So let's get into that. Do we think that 10x, 100x, 1000x growth is possible, or should it be even something of a focus with startups that are focused on financial services and banking and money? Should that be a goal? Jens, what do you think about that?
Yeah, it's super interesting. Like it's like fast coming into this like Series A stage. The like and yield multiples are obviously a huge topic, right? And like anything between 5 to 10x and then like a Series A, it's like amazing within financial services. And like leaving something alone like 100x, 1000x, what is like something like Clubhouse is in the end, right? So it's absolutely insane. It's I guess the benefit of most financial service products, and I'm not using like current accounts aside, is that they become relatively quickly profitable in a way that people pay for them. And that's at least with insurance the case. So it's like there is this basic foundation of, okay, we actually make money with this. This is not just giving out free cards and hoping we can actually monetize them later, which then in turn means if we have 5 to 10x, that's actually healthy in a way because we have the profitability built into the model. Of course, like any company which says, I'm just acquiring customers right now on a freemium model, I will monetize them later. there's the big question: will this happen? Right? Will this actually pay off in the long run? And some do, some don't. And I think like there you just need a really clear vision and evidence built across the journey to make sure, yes, this is going to happen. We have a path. This is it.
Well, and it's amazing what you can do to help people and still grow. Claire, what do you think in terms of this?
So I can't speak for others in financial services, but as a pension company that puts our customers at the center of everything we do, we're obviously led by their long-term interests. So we're only interested in investing into sustainable companies that are trying to build a safe, clear, clean and fair world for customers to retire into in 30 years. So I think we need to stop focusing on pure short-term growth in this way, because only by measuring negative and positive impacts alongside that growth, you're going to have a true idea of its cost. So short-term growth at the expense of the planet or society is always going to be undesirable in long-term savings, because as our customers have told us before, there's no point in having a pension if there's no world left to retire into, or if access to world's resources are so stretched that frankly your pension doesn't get you anywhere. So that's the point about kind of us. But I think on the other hand, if you're going to be purely focused on delivering positive impacts and on improving short and long-term prospects of people in the world around you, then growing at that rate perhaps is desirable. So if you're working in the developing world and you're focusing on the lives of the 1 billion people on this planet who live on less than $1 a day, and your product has huge and immediate impact across that developing world, then perhaps looking for that level of growth to reach millions more people would be desirable.
Yeah, we see a lot of examples of that with Ant Financial and Tencent in Asia. Michael, what are your thoughts here?
Yeah, well, I truly agree with Claire here. I mean, if you want to have impact at large, you also need to grow to a amount of customers. Also, in terms of digital business models, I mean, you'll only be able to build a truly great software platform if you have many users, because those many users will be able to finance a larger and better platform in the end. And so there's a saying, if you want to save the world, you have to throw a better party than the ones destroying it. And that also means you really need to build a great product, and you need to deliver a great service. And you can only do that with a certain amount of size and customers. And so I do think that, especially in digital models, growth is kind of a necessity. However, as mentioned before, there's dangers to that as well. So it shouldn't be the only metric and not the metric to be placed above all. But still, nevertheless, I believe growth is an important metric in order to deliver a great product, and B, also to deliver impact at great scale.
I love that quote. I'm going to build a better party now. Robert, what do you think about this one?
That is a great quote. I think it's very hard to move away from that model. I think there will always be people wanting to invest in something that's potentially 1000x, and so I don't think you'll ever stop that. I think there would need to be a different type of investing model with a different profile to the current one created. But also I think there's a lot that governments can do. And I mean, if you look at in the US, Biden's focus on green jobs, about the environmental positive initiatives having an impact on green jobs and creating equally or better paid jobs, that really brings it across to people that actually it's not going to be just all sacrifice. We can actually make things better by doing good. And so I think there's a large amount of nudge that can go on, and also education that can go on at a macro level. But I think human nature is pretty unchangeable below that, I'm afraid.
Yeah, absolutely. And we work with, venture firms like Flourish Ventures that, have a different tact and a different take on this. And so, let's wrap this question with Josh. What do you think? Should financial services be focused so much on this sort of 1000x growth?
This question has reminded me of something that I was told when we were starting New Life, which was that nobody wakes up in the morning and wants to buy life insurance. And there's two things that tells me. One, that there's no meaningful brand or proposition in the market that people want to buy. They just sold it. And the second thing that it reminds me of is that financial services, they're commodities. There is nothing desirable or engaging about them. So, if you're not doing times 10 rocket, or if you're calling times 10 rocket growth, if you're not growing fast in the most boring space that we could have decided to create and innovate and transform, then we're probably not doing something right. It's a fairly low bar.
Yeah, absolutely. So let's talk about that low bar a little bit in terms of being a startup CEO or a startup leadership team who, after maybe a stint of bad press regarding either employee culture or regulatory breaches or some sort of security thing, sort of publicly dismisses these concerns. What could a leader do when they see some of these damages happen to their own company? Claire, let's start you off on this one.
Okay, so from my standpoint, I think we should be focused on building an investment system in a world where there's just no room for bad corporate citizens. I think we've been focused for so long on the E in ESG, and I think that has started to move things forward. But now is the time that S really just need to come to the fore, and I think that people will no longer tolerate abusive or poor working practices. And we just did a survey of our customers last week, and we asked them a question about the living wage, and we told them that only 43 companies in the FTSE 100 pay a living wage. And we asked them, do you think your pension should invest in companies that don't pay all their workers at this wage? And we discovered that 83% of people who responded to the survey came back and said they expect the companies in their pension to pay all their workers the living wage. And then of the respondents, 33 said they want to remove companies completely that don't pay it. And I think that's really fascinating. And it's extremely topical at the moment with everything that's going on with discussions in the UK about workers and workers' rights. But I think it really tells us something, and I think it really tells us that people really won't tolerate that type of culture anymore. And at PensionBee, we've always been really focused on the S, and so we pay the London living wage to everyone, regardless of where they are. Everyone who joins get an equity stake in the business so that we can all enjoy in the future success together. And, I think it's also another point is about building an inclusive company and companies that reflect the rich diversity of UK society and of course, London. And I think that's something that the fintech industry maybe hasn't been very good at historically. It's always sort of been seen as a bit niche, and that might be down to the fact that we don't really have a huge amount of diversity in the industry. And so, at PensionBee, we prioritize that from the start. And so now we have 40% of our colleagues are for ethnic minority backgrounds. We have 50% representation male female, and then at the board and senior level we have more than 50% female representation. And I think it's that diversity of thinking and that diversity of approach that leaders should be focusing on and striving to create that level of diversity in their teams. So there we go.
Yeah, well, there's still plenty of pirates out there. So Robert, what do we do about those type of people?
So I think one thing that we can do is strengthen the whistleblowing structures. I think that's also come under attack quite often, quite recently. The whistleblowing structure is meant to be there to provide anonymity for valid complaints. And there have been examples all around the world, really, where whistleblowers have been sort of singled out and tried to be identified. So I think it's hard to stop in this information age information coming out. And I think the Uber one was an interesting example with lots of denial, and then suddenly an acceptance and a fronting of it on the change of the CEO. And that was a very refreshing point at that company's growth. I would have thought a founder in that situation should definitely be very respectful. I keep coming back to respect and compassion for your colleagues and stakeholders, and deal with it in a very professional way, and not being disrespectful at all. I think the way that they handle that is a good window onto how they behave in a company, and there's always innocence until proven guilty, but in social media it's maybe not so much the case.
Absolutely. Josh, you want to follow along those lines?
Yeah, so I think I could go into the regulatory aspect for a long time, but just to talk about employee culture and CEOs who are dismissive of the people that made them, really. I find it infuriating, the kind of the culture issues that I'm hearing about some of the biggest, most successful tech startups in the world. And it pains me that they're successful. And I don't really know, you'd like to think that good people build good businesses and look after people and respect people and the staff that they hire, the employees, but you often find that that's not the case. At ULife, we've made an active decision that we wanted to be a good business for the world, but and also good business for the people that work for us. That was like a central, founding principle that we set the company up on. But it, I have sat here, and watched a lot of other businesses grow and do very well, and I've seen that they're not necessarily as lovely to their staff as they should be and respectful, from simple things to much more fundamentals. At ULife, our proposition itself is about giving your staff group life insurance. So the result is that we're seeing more and more companies take their responsibilities to their staff more and more seriously, and we've got a wonderful plethora of companies like Tesco and Co-op who are coming on board and recognizing this movement now. But I think there is a particular sickness within the VC-backed startup scene where I see and hear CEOs talk about their staff in a very disrespectful way, and I find it really upsetting. And I hope it changes. And I just think it's up to everyone to make that change.
Yeah, I think we have to hold more people accountable. Let's dive back into this then, Michael, and then Jens.
Yeah, I think it's really crazy. I mean, you see that these startup CEOs out there, they really exploit their employees, and they always try to see how far they can go. And only once they receive the bad press, they kind of try to roll back and fix things a little bit. But then they immediately go back to the normal way of doing things from their point of view, and again trying to push the boundaries as far as they can. And I think it's really immoral, but I also think it's stupid. I totally agree here with Josh when he says good people build good companies. So I truly believe in the long run, if you have great employees, if you do take good care of them, if you include them, if you let them participate in the profits, if you include them in the decisions, I think it will be a much more financially sustainable company, also much more stable. And I think these will be the companies that will outdo the others in the long run, due to the fact that they have a great culture. People will be just much more motivated. So I truly also, I believe it's stupid to act in a way like that, as I truly think it benefits the whole company and whole society if we would treat the employees as a very important stakeholder.
And then Jens?
Yeah, I would truly hope that companies that are built on positive values are winning this, right. This is fundamental to it all. And I think it's like one of the institutions which should enforce this, also like the board and any kind of like VCs which are involved, chairmans. They're the ones, and then also like saying, what are you doing here with your people? This is clearly not what is good for society, even though it might hamper my returns. Can't you just be right? And the problem with that is how often does it happen, right? If like one of the big VCs says, oh, you're doing 100x, but you clearly not appreciate your people whatsoever, they will still sit there and say, thumbs up. I think that's a problem. Like that comes back to how can we make that investment model that it actually incentivizes them to be on the board and do the right things for society rather than just for returns.
No, absolutely. So let's talk about that a little bit. We talked in a couple of ways about culture, about startup culture and about venture culture. And is there a difference between startup culture and grown-up culture, or culture outside of sort of these big dollars that get exchanged in these companies? What needs to change? How do we build that great culture? Robert, let's dive into that with you first.
Yeah, it's a great question. I think there definitely is a difference between startup culture and grown-up culture. I think if you look at lockdown, most companies in the UK did not have a remote working policy in December 2019. I think it was 25% of companies had an information security policy, let alone a remote working policy. So everyone rapidly tried to put those in. And there was a lot of commentary about how do you trust your employees to actually work in those situations. The managers were very fearful that employees would just skive off. And obviously in startup life, you're very distributed from the beginning, and remote working and the whole team, and it's all built on trust in that team. So it's a very different culture, there really wasn't any difference for us as a startup going into lockdown in the way that we worked and communicated, really. And I think that what's happened is there was an interesting state of the industry from the Project Management Institute, and they were talking about gymnastic and businesses, and they tended to cluster at the smaller end and at the larger end. And I think what happens is once you start growing, you start getting that sort of bureaucracy coming in. That can be a little bit suffocating. And there comes to a point when a company will go, actually, they recognize that's happened, and they try and reverse that and bring in some of that gymnastic ability. And I think that's really coming through much more in the larger organizations. And there has been, maybe with various different movements recently, organizations becoming much more socially aware. I mean, you look at, say, the Georgia voting rights in the US. I'm referring to the US for some reason a lot at the moment, but in Georgia, there's a lot of companies talking about the voting rights laws in Georgia, which is very interesting to see. So I do think that the startup culture is different to a grown-up culture, but it is a grown-up culture, and I think people are recognizing that. And as was said earlier, if you have a happy workforce, you tend to have a much more productive one as well.
Absolutely. Josh, what about the gymnastics of grown-up culture?
Yeah, so I mean, as you can imagine, that's kind of the great challenge of mine, is understanding what it is to grow up as a business. As my second startup, both have been growing, or have grown very rapidly, and have required this kind of startup culture to, bring in grown-ups, and then you kind of bring back, and you're going back and forth. So I totally agree with that. It's really good. Gymnastics, good word. The way I've reflected, and the way I would communicate is, or the way I would describe this is, there are two types of people that you end up hiring, or you've got the value creators. Now that's startup land. We manifest out of nothing magic. And then you have the value protectors, the incumbent world that already exists, the FTSE. It's all about respecting and maintaining that value, protecting it. And when you look at the attributes of the individuals that when one hires that you're looking for in a startup, you're looking for dynamic people who can transform and transition the world versus static people. And I find that if I was to describe startup culture and grown-up culture and the difference, it would be simply that in startup culture, it's about dynamic individuals imagining the world they want to live in and creating it. Whereas in the grown-up culture, it's about protecting an asset that exists and not letting it fall too much or even grow too much. It's just protecting what's there.
Oh, I love that. Great points. Jens, what are your thoughts on this?
Yeah, I think it's if I think about the two-term startup culture versus grown-up culture, it's all around putting effectively the values you live in the earliest stage into a process. Like in the beginning, you just huddle together. You just constantly, like all the time, you make decisions together, up to the point where you know that, okay, everyone will live and breathe what I believe is right. And that obviously doesn't scale like up to 100, 1,000 people. So how do I make sure that this transforms, or like basically is like pushed down into every single person that joins? If it's the intern that stays for 3 months, or that C-level executive which joins me in a Series B, and like putting that process in place to really make that happen and like live that. That's the biggest challenge, and like that's the big difference between those two. How do you scale good culture, happiness?
Yeah, it's almost like we think that college never ended, and so we kind of take that approach of it's my way, and you're going to follow along. Claire, what about grown-up culture versus startup culture?
I guess I think everyone's made some really fantastic points. Actually, I think what I'd add is that it's really kind of about the level of responsibility that you have to the community and the world around you, the community in which you operate and the world around you, because I think the bigger you get, the more you need to start taking seriously the level of ownership that you've got for solving the social and economic issues in the community in which you exist. So that's, as I touched upon, looking for diverse talent. That's making sure it's reflected at every level of your company. It's recruiting based on people's motivations and passion for your mission, and not just because they went to a certain university or they have a particular background. It's the living wage. It's about internal training, blind hiring, closing ethnicity gaps and gender pay gaps at every level. And I think it's also about kind of working with the local community. So whether that's partnering with local schools, to open up work experience, mentoring, and kind of inspiring young people to feel that they can see themselves in working in your company in the future. And so I think all of those things together make the workplace more inclusive. And I think going back to the earlier point, I think you need to really focus on building a company that reflects the society in which you operate. I think that's the responsibility you have when you're grown up.
Absolutely. And you think a little bit longer term, and you think a little bit beyond just yourself. Michael, some final thoughts on this one?
Yes, I do believe culture is really important. So the larger you get, the more important culture becomes, because it will be one of the main instruments you use in order to steer the company, because you won't be able to, communicate directly with all the employees. You can't direct the company through strategies anymore as good as you can when you're still young and small. So I do believe culture is really important. And it becomes harder to change also the larger you get. And so I sat on a panel with one of the ex-CEOs of Deutsche Bank once, and he was asked, so how it's possible that Deutsche Bank ends up being involved in every scandal there is, and even though they you think they might know better by now. But he said, yeah, they do know now. However, there's 100,000 employees, and you can't change it that easily. So it just takes time. So and so for them, it's really difficult to do. And so you have to start when you're young, I think. And I think it's all about consistency. It's about walking the talk. So with Tomorrow, for example, transparency is one of our values. And so we've included one of our employees in our advisory board, where there's only VCs and founders usually, and we had to convince everyone in the beginning that it's actually a good idea, but it's working out very well. And I think this is one of the few examples where you can show that you actually do what you mean. And if you do that, you can really create a culture, and then you just have to make sure that you're building the right culture.
Well, let's keep along those thread and stay with Michael as well there. So many of you are founders, or you've been part of leadership teams of startups. Let's talk about the type of company you envisioned when you started. What did you learn, and did you pivot, and whether that was something that happened to the company, or like this pursuit of growth, or this pursuit of like a mission? How did it change, and what did you learn? So let's start back with you, Michael.
Yeah. So in terms of business model, we actually wanted to start out with the sustainable investing. And then I think like 1 week before the date of the notary with our first investment round, we had finally come to the conclusion that it would be better to start with a sustainable bank account. And so we did pivot right in the beginning in terms of the business model. And in this case, also, we thought about, do we tell our investors that we want to change the model before the notary session, before the money comes in? But we, thinking back on our values, and transparency being one of them, it was quite an easy and fast decision. So we went and told them we have a better idea, because we believe it's going to be hard starting with that other model. And in this case, they were happy to go along and help us pivot. And they invested nevertheless. So fortunately, that worked out very well. And in terms of culture and what kind of company we would want to build, I mean, yes, there were always a few basic values that we were already kind of living, us, me and my two co-founders. However, in the beginning, we were actually really busy on, getting off the ground. And so the first 12 months, it was more about finding people who we get along with, and building a company that we like to work in. But we didn't really focus on formalizing any cultural aspects or so. That only came later, and that's maybe also one of the learnings, starting earlier with that kind of strategy or that kind of aspect.
And Josh, what about you?
So I think I can only speak from my point of view. I think my co-founders may have a different answer. They may not. I think when we started out, the company we wanted to. I remember meeting Sammy Rubin, who's the CEO, and he said to me, he was like, we were meeting. He was looking for a technical co-founder, and we had this idea, transform insurance, win-win insurance, whereby it's a de-risking experience with the end buyer. and I had this idea that I wanted to build an app that people would have in their pockets and use every day, that would incentivize them to do healthy things, and it would be taking all the magic of a game. And I gotta say, like, we're kind of like, that is what we made. I mean, the audience changed. We originally were D2C, and then we became B2B as part of that journey, very early on. Like, we never even built D2C. We went straight B2B. And I think that, if I look back on what did we want to create, we wanted to build this enormous movement around better, fairer, fun insurance. I think, like, to be honest, we're en route. I don't know if I think that the only difference between where I am now and where I imagine we'd be is probably a hell of a lot bigger, because everything was meant to happen in 2 weeks. And but I think we're en route, and we've made incredibly fast progress. So yeah, it's just
there's that growth again.
Yeah.
Jens, what about you?
Yeah, I think when we set out, the center for us was really changing insurance, like changing the business model of insurance for the better of the people. And I think, like, we're still doing this. This is still the core, and like there's something deeply ethical about that, and like really drives our decision making, from like handling the claims in house to how we advertise, and like how we build this community around the product. But I think it's also like it moved a little bit further, because it's I mentioned in the beginning, like, we serve cyclists today, and as it is a niche, you start serving these people really holistically, and like trying to touch many different areas of their life. And I think that's probably like where we almost like deviated initially. Like, we thought, okay, we are building a mobility, and then maybe home insurance, and maybe something else. But for us, it's now everyone who rides on two wheels is our customer, and how can we serve them with products that are just fairer and in the market beater.
Claire, what about you?
So I guess I've been lucky to be part of the Pension Bee journey from the beginning, and had a chance to input kind of into the shared vision for the company and the culture and values. But the original vision hasn't changed from day one, and that was to put customers at the center of everything and to make pensions simple. So that stayed the same, and will continue to stay the same. But it's just the scope of the vision has just got bigger and bolder over time. And so now we're calling for pensions to be simple for every person in the UK, and for everyone to have a happy retirement. And then we've sort of gone on as well over time to challenge consumer detriment that we found impacting all savers in the UK pension system. And we've got many examples of that, where we've actually taken data from our own customers and said, there's huge consumer detriment here around an issue like pots being charged out to zero by fees, and we've gone to government, and we've challenged it, and in many instances we've seen a resolution to those problems. So it's calling out injustice across the whole pension system, really, and trying to now build a world that's a happier and safer place for all savers to retire into as well. And I think we're trying to build a model company that demonstrates that purpose and profit can coexist, and I guess to show others that if you do have an honest and values driven business that's focused on solving a real problem, and that's trying to help millions and millions of people in the UK have a happy retirement, then you can be a success. And so the vision has stayed the same, but the scope has definitely got a lot bigger.
Very good. And you have a great name for that, to make pensions a happier place. Robert, let's wrap this one with you.
Thank you very much. So it was really interesting listening to everyone on that. And so I think when you start with the why, so Simon Sinek start with the why, our why is to joyfully use tech to solve people's headaches and make them feel happier. And I think that's, would have been seen as incredibly soppy about sort of 15 years ago. But I think it's really valid. And when you start with the why, when you have a clear purpose, like clearly this panel does, you can then, your business may pivot, but you're very clear on your mission. And so your values stay with you. And I think if I look back at companies I've been involved in, growth companies before, I think that's held true. And where it's not held true, where people weren't really sure about the why, I think that's when you lose you lose the company that you wanted to build. So I'm very happy at the moment with how we're doing. I'm very excited. I think it's interesting that you can sometimes, your horizons just get exploded at particular points. And if you start from the right place, you can handle that and be excited about it.
Absolutely. So we have a couple questions left, and we've got our time clock sort of dwindling here. So let's keep our answers a little bit short toward the end. But I think it's important, this question especially, have you ever had a difference of opinion with your investors over the level or the pace of growth or profit or product or the type of operations that you're running? And how did you handle it? So does a check mean that the investor can have a say in that business? Let's start with you, Jens.
Realistically, yes, investors have a say in your business because they're shareholders, right? Especially in an early stage, if they get a minority share of their 10, 15, maybe max 20%, it's still fairly substantial, and they will have a say in that. I think the good leadership teams control that, though. They control the narrative of what are we communicating in board meetings? How do we steer the company? And if you have a clear idea of what you're doing and what you're executing in the next 6 to 12 months, or if they let the investor come in and say, oh, why don't you try this, and maybe this product is a great idea. I think having that narrative in your hand and really knowing what you're executing against is incredibly important. Because obviously, all VCs will have strong opinions, and that's also what you get on board for. But it's about guiding them and aligning them with your long-term strategy.
Absolutely. Michael, what are your thoughts on this one?
So we've been lucky enough. I mean, yes, investors do have a say, but we've been lucky enough that we haven't had any major differences yet. However, that's also, I think, due to a very strict fundraising process where we do look very, very hard that we find actually the right investors. So with Tomorrow being a C Corp company, a B Corp company. That means we also had to change our bylaws, and that means including a sentence that says Tomorrow has doesn't only focus on the shareholders, but tries to create a large amount of positive impact on the environment and society. And when new investors come in, they check the bylaws and they cross out things or adjust things. And this one point, or this one investor, they crossed out enormous impact and said, this probably won't be possible. So in this case, it was very clear this is not an investor that we would want to work with. And so I think you should have to be really careful by selecting the right ones, and this will help you a lot along the way.
Absolutely, great point. And we talk about B Corps an awful lot in Beyond Good. Claire, what are your thoughts on this one?
So we never went down the VC funding route, so that it never happened for us. We just were funded by people that we either knew personally or were introduced to us, and they supported the business visions from day one, and they agreed with the business plan and the growth in that original business plan. And so we had always very high levels of trust and agreement from that group of people about the level of growth. And so that came with a lot of autonomy. And so they didn't really have a say in that. When it will change, though, is when we become a public company, we're going to have a host of new investors. And those are going to be people who haven't been on the journey with us since day one and don't know us personally. And so we obviously have a lot of opportunities for future dialogue with those new shareholders at our AGMs, and for them to be able to share questions throughout the year. So that will come with, lots of new exciting opportunities for engagement and for discussions around growth with people who may not have a deeper understanding of the business and the business model. But we do hope in the future to challenge the current model of AGMs, which we think are kind of inaccessible and generally kind of poorly attended and unproductive. So we have a big vision for what we're going to do with those as well.
Yeah, that's a great point. And, you don't have to go down the venture route, which is, I think, a great point. And it's also good, startups go the IPO route eventually and quicker. Robert, what are your thoughts on this in terms of investors and checks and influence?
So I think I can probably give you a very quick answer and save some time as well on this one. I agree with what's been said. I think doing your research on your investors is very key, and that will enable a good relationship. They are a shareholder, and they are possibly a board member, so they do have a voice, and you've got to listen to them, and they've got a bag full of experience. So I think the investor company relationship key one, that if it sours, it's quite a big impact. So it's very important, that selection process, and happily for us, it's been a very happy one. And in the companies I've been a senior team member before, it's always been a very good one. So I think it's been very fortunate.
And Josh, what about you?
Thank goodness that we've never really had one of those terrible VC kind of horror stories that I know I have heard of. We've always been incredibly thoughtful about choosing the people we would work with, and investors bring a lot more than money. They can bring experience, but they can also bring they bring an opinion to the table, and an opinion that should be listened to and should be understood. And I find that because of my business partner Sam and Sammy have been very good at selecting the right investors for who we are as founders, and as a result, we've kind of had a really good dynamic in working with our investors. In fact, I really like our investors, which I don't hear many other founders saying. I've really enjoyed working with them over the years. In terms of when we've had a difference of opinion on levels of growth, if that has happened, the way we've always handled it has been time. Time heals all, or it exposes all, right? It's time for us has been a fabulous tool to use as and when you need to. If you're doing the right things and you have conviction that you are doing the right things, you find that you get there. And if you're not doing the right things, it becomes very apparent with time as well.
Absolutely. So let's talk about that time, and let's talk about this past year to sort of wrap up today. Many people have described the impact of this pandemic in the past year as the time the tide came in and revealed how many startups were swimming without clothes. So how has this past year impacted your business, impacted your sort of thought about growth and profit and survival? Let's start with Claire on this one.
For us, it's very simple. I mean, the acceleration of the shift to digital as a result of the pandemic has just meant that we experienced phenomenal growth. So we doubled our customer base. And that's because people were at home. They were ready to get through that to-do list, which has always nearly got sort my pensions out on it. And they were, in fact, cleaning out the drawer that had all the dusty old paperwork connected to that pension on it. So we did really well. That's not only because we're an online business, but because of our history and focus on kind of sustainable growth and putting our customers first and staying true to our values, which we did over the past year as well.
That's good. Robert, what about you?
So that's a fantastic thing to hear. So for us, our purchase, we're B2B, and our purchases are people in security, IT, ops, and compliance. So when the first lockdown came along, everyone was like, how do we deal with this? What is remote working, like we were talking about with the policies and everything before? And we're a discretionary purchase, right? We're an improvement. We're a new way of doing things. And so we're like the sort of HubSpot or Zero for GDPR. So people, that market's gone from bleeding edge to leading edge and just entering early adoption through the lockdown. So we saw quite a sort of peaceful first half, and then we saw it really come through, which was a really interesting sign that GDPR is just sort of embedded now as business as usual. And what's really interesting coming out this side, and we actually raised right at the beginning of lockdown, and we've just raised again at the end of lockdown, which is really nice. But we've really seen that, a couple of years ago, we would be saying we're doing privacy SaaS, and we'd be showing the early product, and people are going, well, why do we need privacy SaaS? What is that? And now we say privacy SaaS. They go, oh, do you do this, that, and the other? And I think that digitalization over this last year has really made people look at thinking, we're distributed, we're remote, how do we do things better? So it's been we had a high level of retention, which was fantastic, but it's been more of a sort of flat year, but we've recharged the batteries, refilled the coffers a bit, and we're really excited about this coming out of lockdown.
Oh, that's great to hear. Michael, your thoughts on the past year?
Yeah, so for us, it's very similar to what Claire just said. So being a digital company before, it was easy for us to work under the new circumstances, and also the new trends of or the enhancement of the trends of sustainability and digitalization did help us. So we grew from 20,000 to 50,000 customers during that year, and so it wasn't a problem for us.
Oh, that's good. Good to hear. You guys are all doing pretty well. Jens, what about you?
Yeah, I think from our perspective, obviously cycling has found, has really grown in the last 18 months. So like that clearly benefited us. I think it's for us, it helped us to really focus and then double down on like, okay, how can we get people moving within the city and like make sure that they are as safely as possible riding around the city. So it's like, it gives you this like focus, at least in our case. And of course, we are fully digital. One of the interesting side notes were that, of course, like all the bikes were sold out. So trying to actually replace bikes for our customers has become a slight challenge, because you sometimes have to source things in Germany just to get them back on a bike, similar to the existing one. So it's like, you also have challenges, but largely it helped us.
Well, it's great to see, how so many business models have shifted and adapted, and how you guys have all approached growth this past year. So I wish you continued success. Let's wrap this conversation about growth and startup sort of culture with this. In a couple sentences, given what we talked about today in the context of growth, where do you see your company and your business model 5 to 10 years from now? Let's start with Robert.
Thanks. So I think our business model is going to be the same. It's B2B SaaS, and we want to be the most loved compliance SaaS platform out there. Very much like I say, the sort of the Xero, Zoom, or HubSpot GDPR, and also security by that point, which are the two biggest operational compliance issues for businesses. And it may sound a bit sort of dull compared to, say, cycling, which is much more healthy, but it's also, it is something that they're the two biggest compliance issues for businesses, and that mass market, you can really have a big effect on how the well-being of people doing those jobs.
It's good to see some things aren't going to change. Josh, what about you?
10 years from now, I don't think, how do you say this without being like seen as arrogant, but like without doubt, everyone, hopefully over the world will know about New Life. We'll have be in the pockets of hundreds of millions, if not billions of people, and we'll have transformed people's perception of insurance from something that was static into something that's enjoyable, transformative, dynamic, and joyful. And that's New Life, but it's just little goals.
little goals and a little bit of growth there too, hopefully in the right way, which is what you're doing right now. Michael, what about you?
Yes, it's hard to follow after such ambitious goals, but I try not to put up too many numbers. But we really do want to, create massive positive impact by moving money into the right direction, helping to achieve the sustainable development goals. And that means growing tomorrow. That means expanding across Europe and really making it easy for many people out there to create a positive impact through their finances, and doing that hopefully with the same great team and many other really cool people that will hopefully join the Tomorrow journey along the way.
That sounds great. And Jens, what about you?
Yeah, our core is to create strength in numbers, and it's like, with that, it means we want to really bring everyone onto wheels, and we want them to ride safely and like enjoy their life. So it's like that's my hope in like 5 to 10 years. It would be that at least in Europe we can accomplish that. It doesn't matter if you ride for fun, for fitness, or for work. Like, you would be with Laka.
Yeah, fantastic. And I'm going to leave the final last words for Claire.
I guess in many ways, the listing just feels like the beginning of the next stage of the journey for us. So we're going to stay laser focused on the mission, as we've done since day 1. So we're going to make pensions simple, but we can now start to reach millions and millions of people. And we can now start to reach millions and millions of people. And we can now start to reach millions and millions of people. And we can now start to reach millions and millions of people. And we can now start to reach millions and millions of people. And we can now start to reach millions and millions of people. And we can now start to reach millions and millions of people. And we can now start to reach millions and millions of people. And we can now start to reach millions and millions of people. And we can now start to reach millions and millions of people. And we can now start to reach millions and millions of people. And we can now start to reach millions and millions of people. And we can now start to reach millions and millions of people. And we can now start to reach millions and millions of people. And we can now start to reach millions and millions of people. And we can now start to reach millions and millions of people. And we can now start to reach millions and millions of people. And we can now start to reach millions and millions of people. And we can now start to reach millions and millions of people. And we can now start to reach millions and millions of people. And we can now start to reach millions and millions of people. And we can now start to reach milli more pension savers across the UK with the product and with the vision. And obviously, the more people we reach, the greater the social change we can drive, both through voting as an asset owner, but also as a vehicle for change as a model company in the investment system. And like when we think about the size of the opportunity, like the defined contribution pensions market is worth now £1 trillion, and our assets under administration were 1.4 billion at the end of 2020. So that just gives you some kind of sense of the scale here and the vast market opportunity that's out there to make sure that everyone in the UK can look forward to a happy retirement with Pension B.
Fantastic. Well, I want to thank you, Claire, and Robert, and Michael, and Josh, and Jens for joining us today, and all of you to join us in this session, discussing the underlying purpose of the startup business model, the metrics of building a sustainable business, ways that we could go beyond good, the lessons that we've learned from this past year. And you don't want to miss what is coming up next here at FinTech Talents Digital Builder. We have a global innovation leader and a good friend of so many of us in the fintech space, Neil Cross. He's the former managing director and CIO of DBS Bank, and he tells the story of building Hotel Orangutan in Indonesia and what lessons he took from his time working with Inside Financial Services into building a hotel in the middle of a jungle. So let's see you there in the next session, and thank you all for joining us today. Thanks a lot.
Thank you.
Thank you.
Thank you.
Thank you. Very smooth. Thank you, everybody.
Appreciate your time today, guys.